Ever feel like investing is a VIP club where the bouncers check your net worth at the door? Yeah, private equity used to be just that. Christopher Zook, founder and CIO of Kaz Investments, explains how private equity is becoming more accessible, the potential upsides, and why finding the right team matters. First up, the door is opening. Private equity used to be locked down for billionaires and big institutions. But Zook says recent SEC policy shifts and new fund structures are beginning to open the door to more investors. Sometimes even through vehicles that offer limited liquidity. Everyday investors can now tap into the opportunities and benefits that were once reserved for only the world's largest investors. Next, big returns, big risks. Historically, private equity has outperformed public markets by more than 5% annually, and over decades, that compounds into eye-popping numbers. But returns vary wildly, so manager selection is critical. Zook says that unlike public markets, private market investments show a wide dispersion of returns, making manager selection critical. Finally, choose the right team. Private assets range from relatively safe to very risky, with timelines from a few months to 10 years. Zook's advice? Partner with experienced managers who invest their own money alongside yours. In Zook's words, winning in the private markets depends on accessing quality managers. Alignment of interest is crucial. So, while private equity might not be the Wild West anymore, you still need a good trail guide. With the right access, realistic expectations, and the right partners, you can step into a corner of the market once closed to all but the mega rich. Got a money question? Head to GoBankingRates.com and ask away for a chance to win $500, plus your question could be answered by a top financial expert.